Hello, my name is Andrew Dennan and I'm the Chief Executive Officer of Ascent Resources PLC, an AIM-listed small-cap natural resource company who's proud to have now announced its maiden deal away from its legacy position in Slovenia, with entry into an existing and operating US onshore gas processing and helium purification business, which has recently been bought out of Chapter 11 insolvency in the Paradox Basin in Utah. By way of recap, Ascent has a long history in Slovenia where it has invested over 50 million euros during the last 15 or so years in the development of a 400 BCF tight gas project, which was then subsequently frustrated and now recently expropriated, resulting in the company pursuing a funded and well-advanced 656.5 million euro Energy Charter Treaty damages claim against the Republic of Slovenia. Additionally, following the developments in country this year relating to the self-declared insolvency of the company's JV partner, the company is now also pursuing a claim for 11 million euros in the subsequent insolvency proceedings, of which approximately 8 million euros relates to monies received by Geoenergo and owed to Ascent, with the balance of the claim relating to Ascent's share of JV property. The company continues to defend its interests in these claims and looks forward to updating shareholders on progress as the processes continue. Now, after a period of deal origination and screening, and also following the completion in Q1 of this year of the company's distribution of a 49% economic interest in the net proceeds received in the event of a successful ECT claim outcome, the company has now secured its maiden investment to forge its future focused on US onshore gas production and helium purification and liquidation, with an initial investment of $1 million into GNG Partners LLC, which is a new company founded to acquire the midstream and downstream assets of Paradox Resources out of Chapter 11 insolvency. GNG now own and operate the 60 million standard cubic feet per day Lisbon Valley gas processing plant, which has a 1.1 million standard cubic feet per day processing capacity for helium, a 45 million standard cubic feet per day cryogenic plant, and a 10,000 barrel per day fractionation train. The plant was specifically built to process the Paradox Basin's natural gas that often has high carbon dioxide, nitrogen, and helium content. The plant has a liquefaction unit which positions the business to access premium liquefied helium markets, and GNG believe that the Lisbon Valley plant can produce approximately 3.4% of the US liquefied helium needs. The plant is currently operational and processing gas and is fed by over 500 miles of gas gathering pipelines which span eastward from Utah into Colorado and head south down into the Four Corners region, where pipeline is contracted to gather gas from world-class helium sources of up to 4 to 7% HE. This is also a downstream business with helium trucks, which all enable the plant to sell initially gas and hopefully by the end of year liquefied helium directly to end consumers, allowing GNG to capture all margins within the purification and processing of helium. GNG believe that the plant has a replacement value significantly in excess of $150 million, plus associated lead times in EIAs and permitting to be able to construct a gas processing plant. However, through the Chapter 11 process, they have acquired the plant for an effective consideration of approximately $11.5 million, which is funded via a $7 million, 7-year, 6% PIK note provided by the pre-insolvency creditors, and the balance is funded via GNG equity, which we believe represents a significant value entry point. GNG is a private vehicle which is institutionally funded by the founding partners and American Helium and its affiliates. GNG have to date raised $8.4 million in new equity and have 9 million membership units in issue. Ascent has invested $1 million via a zero coupon 2-year convertible loan, which converts into 1 million units of GNG, which if immediately converted today would represent 10% of the allowed share capital of GNG. This deal enables Ascent to get immediate exposure to the GNG onshore gas and helium processing story, fresh out of Chapter 11 insolvency and substantially on the same economic terms as the initial GNG shareholders, giving the company exposure to a revenue-generating platform in a safe jurisdiction and which has a number of opportunities for Ascent to find further scale as it solidifies its position in US onshore gas and helium markets which are buoyed by demand for natural gas in the US and elsewhere to generate electricity to feed data centers and to power the artificial intelligence revolution. In tandem with this new investment and strategy focus, Ascent has announced its intention to appoint Mr. David Bullion to the board as a non-executive director of the company. David is a seasoned oil and gas expert who has previously held a number of senior positions, which include a 20-year career with BP. David is the Chief Investment Officer of American Helium LLC, a position he's held for the last 5 years, and American Helium is an upstream operator with significant acreage and wells under production in Colorado and Utah, as well as also being the newly appointed CEO of GNG. David's appointment strategically aligns Ascent and GNG and further confirms the company's excitement about the gas processing and helium production opportunities in North America. The company has also announced it intends to appoint Mr. Edouard Etenver as an independent non-executive director. Edouard is an energy and natural resource finance and commercial executive who has over 18 years of experience in the oil and gas sector. Edouard and David will join the board subject to completion of normal regulatory checks in replacement of Marco and Malcolm, who are stepping down from the board at the end of May. The company is pleased to have secured this new transaction alongside new funding of up to $2.7 million, of which it has initially accessed $1.7 million through the issue of a 12-month convertible loan, which converts into equity at a fixed conversion price of 3.22 pence, being a 40% premium to the closing bid price, which is the price the company successfully raised $700,000 in new equity from existing shareholders, including cornerstone investor MBD Partners, as well as the board's participation. The company is now positioned with access to a currently operating and revenue generating platform in a safe jurisdiction, underpinned by its existing footprint and positioned to significantly grow via a number of verticals, which include moving back into premium liquefied helium markets. The company looks forward to updating shareholders on developments relating to this new investment as progress is achieved. Thanks for watching.